Imagine adding millions of dollars to your real estate investment property's value without even raising the rent. Most investors only focus on hiking up rental prices. What if you could uncover hidden cash flow and supercharge your net operating income simply by being more creative? In this video, we're diving into the most underrated yet massively profitable strategies you can implement right now to boost your returns and dramatically increase the value of your multifamily investment. Get ready, because one idea can add up to millions of dollars of extra equity for you. John, it's great to be here with you.
Yeah, Mark. This is such a fun topic for me because it's really that opportunity. You said it, but to get creative and really look for interesting ways that you can add value to your residents while also adding tremendous value back to your investors and returns. And so, whether it's touring rent comps and seeing what your competitors are doing, or us just, putting our heads together and coming up with creative ideas and solutions, for us, we love our residents, and we know that really, if we take great care of our residents, then our investors will be looked after. And so these are all opportunities to not only honor that by doing a great job for our resident, but also to add a lot of value to our investors. And so once again, it's fun thinking about these things. When we're thinking about a deal, like, could we do this? Should we do that? Right? And it's a joy. So I'm looking forward to this podcast for sure.
For sure. And so if you are interested in finding more about our existing deals and what we have coming down the pipe, go to fariscapitalpartners.com and make sure you book a one-on-one call with either John or myself and get on a reservation list. Because if you get on a reservation list, you will be one of the first to find out when our next deal actually comes out. And so these are limited spots, and they're for accredited investors only. And so go ahead, book a call, see if you fit, and if this is a good match. And you can go to fariscapitalpartners.com for finding out more information. Now, as John, just circling back to the topic here, I mean, it's all based around this idea that for every $1 you increase the net operating income per month, you can increase the overall value by $240. And so this is where I've totally fell in love with multifamily investing. And so that's for anything above 4 units. It becomes commercial, and these properties are valued based on the amount of income it generates. So if you can increase the net operating income so that you can increase the rent, or as I had mentioned there in the intro, the rent isn't the only way you can increase the amount of income. And that's what we're going to be talking about. But what's really interesting is that you can lower your expenses by $1 and it increases the overall value of the building by $240. And this is just based on a 5 caps. If anybody's wondering, well, how do you figure that out? It's based on a capitalization rate of 5%. So this to me it's like a game, John. This is a game that when we go in, we're detectives. We got our team there, and we have such vast experience. Georgia in the asset management over 20 years, going full cycle on well over 20 deals. And then we have Joe Lowry as $1 billion of acquisitions experience. And you and I with our real estate, we sold thousands of properties and billions of dollars in real estate. And then we have our GC there as well. And so we're going in, and not only we preliminarily look at it, but when we're touring these assets as well, we're looking for creative ways that perhaps the owner has not seen yet. And even better, maybe other buyers haven't seen yet as well. And so we're going to be talking about what are some of these secret things that we really look for that can increase the value of the building outside of the traditional just raise the rents.
Yeah, that's right. And, the reality though, Mark, is you're dead on about the expenses. And for example, we closed on a deal where it was self-managed and the owner and his daughter were taking sort of above market salaries, which totally makes sense. And I would do the same if I were in their situation, but we're not owning these as individuals. This is a business we're running, right? So we could immediately reduce expenses by normalizing those payrolls. But it is harder and harder to find expense reduction, right? Materials costs are rising and, wages are increasing. And so we absolutely focus on those expenses, but often we're having to get creative with these additional income opportunities, right? And, once again, I said it earlier, but why we love it is because if you do it in the right way, you're absolutely adding value to the resident experience at the same time. So it's really a win-win, not only for our investors, but for our residents as well. And, to go back to that capitalization rate of 5%, that is sort of historically where multifamily tends to trade. The cap rate of 5% is what you typically see in a normal market with sort of normal market dynamics. So, for example, if you're buying something in a small rural town, you might have a higher cap rate just because of the location. There's a little higher risk there. But in a risk adjusted sort of good market, that's what you're generally seeing. So, today we're in a bit of I wouldn't say a downturn in the market, but because of higher interest rates, there is less deal flow. So cap rates have increased a little bit. But that 5% cap rate is that the reason we use that is that has historically on average where these deals are trading at. And then what we look at is obviously forward-looking projections as well. So, you may see a deal we're buying at a 5.5 cap, and then our exit cap rate, we're assuming 5.5, but realistically we'll probably hit 5. But that goes back to our conservative underwriting. So just a little color there for maybe the newer investor going, well, why a 5% cap rate? That is just historically what we're seeing it in the markets we're buying where deals are trading at.
Yeah, really good. And so to give some examples of some of the things that we look for. So I'll share, I have a little miniature schnauzer. Her name is Bella. And it's a little dog, right? And so I have, for about 2 years, I have 3 boys and my wife. They were like, come on, Dad, let's get a dog. And Joanna's like, come on, I just want a dog. I just want a dog. I'm like, no. No. Do you know how much work they are? I mean, being a broker as well, I've been in a lot of homes and I've just seen kind of what they do to homes. And I'm like, no, like it's just a lot of work for 2 years. Finally, I was weak one day and they got me and I said yes. And so but I didn't say yes, we're going to go get a dog. I said yes. They're so good. They closed me on going to look at a puppy. Let's just go look. They did the 2-step instead of the 1. And I got there and I see little Bella. And little Bella was like, she's a sweetheart, miniature schnauzer, but just really, really sweet. And of course, I said yes when I was there. And over the last number of years, I've just fallen in love with this dog. Like I love her. And I'll sit down, and she comes up, and she comes beside me, and she's actually coming to me now when I'm sitting beside Joanna instead of Joanna, and I kind of feel like I got that feather in my cap because normally she went to Joanna.
Yeah.
And so the reason I'm sharing that story is that when we go to an apartment for main level apartment units, there's an opportunity to have fenced in yards. And so you can fence in a yard and go to the owner and say, hey, listen, if we fence it in and there's no extra cost to you, but you can have a private exclusive backyard and we'll look after all the costs on installing the fence, but it's going to be $125 extra per month. Is that something you'd be interested in? You better believe that if somebody said for $125 a month, you could have little Bella go run around and have her own private yard and be safe, and I wouldn't have to worry about her the same way, I would say yes all day long. And so there's an opportunity there. You can go with fences. That's one example. But another one, for example, is valet trash. Yeah. It's like instead of walking down your trash down to the trash can, and you're going down, just a big hike. It's like, we'll actually put a valet trash outside your door and let for an extra $30 extra a month. Here you go. This is huge convenience. And the list goes on in regards to creativity in order to help generate more income. And so it's not always based on your rental income. And so that's one of the things that I talk about with the team. It's like, okay, what's the lift? The rent is only part of it. But I mean, now we go and map it out as like, here's all the opportunities that we can do to be able to increase the overall value of the building.
Yeah, 100%. It's fun. I'm laughing about your story there with Bella because, how my family got me is I was out of town. I had run my first marathon. So, and I don't recommend it, by the way. I'm glad I did a couple of them. But when you're finished with that, you are depleted. I mean, I can't even describe the feeling. And so, of course, my wife, I don't know if she strategically thought about it or just intuitively figured it out, but she's like, now's the time to strike. Because she called me that afternoon and was like, hey, I think we should get the kids a dog. And I was just like,
Yeah.
Wait till I get back in town, at
Yeah.
least, you know.
We need an answer right now, quick.
Yeah,
It's like,
they
fine.
got
Yeah.
they got me when I was weak and depleted.
Yeah.
But similarly, he's literally sitting right next to my feet right now, and I love the dog, and he's 14 now, and now like we're getting weepy thinking about him getting older and all that. But yeah, I mean, people, right? I mean, I think if I remember correctly, like the pet industry is something like a $38 billion a year industry in the United States. So people spend a lot of money on their pets, right? And so offering that convenience, offering something of value, residents are absolutely willing to pay for it. Now, on top of that, there's another factor that we have to consider as owners that, you mentioned this, but dogs do sometimes tear up a home a little bit, whether it's scratching the floors or, maybe they jump up on the door a little bit. And so, charging a pet deposit, right? So we're factoring in that expense that we may incur to turn that unit when they move out. That is additional income, particularly because we have in-house construction manager, we have in-house maintenance techs, so they can do a lot of that work, but we capture a little bit of income there on pet deposits. And so really the sky's the limit, Mark. And things we think about a lot are just like convenience factors, right? So, more and more people are renting. I think about a third of Americans are renting today. The average first time home buyer went from 30 to 38. And so people are staying renters longer. And, maybe depending on personal desire or job movement or whatever, they move every few years. And so do they really want to haul a washer and dryer up 2 or 3 flights of steps every time they move? No, they don't. And so what we can do is put in brand new, really nice washer and dryer units into our buildings. And, for us, we would not, I mean, it'd be a rare day we would buy a building that does not have either already in place or the ability to put washer and dryer hookups in, just because I think that residents almost demand it today. But when they're not in, we'll put them in and we'll charge a little bit more as a lease. We'll lease you these washer and dryer units. And Mark, what's so great about it is that 3-4 years later, 5 years later, if they're a little tired, we can sell those on the third, on the market, right? Maybe for $50 or whatever. But we're cash positive because we're leasing the rent washer and dryer. We're charging the tenant for it. There's a little bit we take off the top, and then we turn around and sell those in the future. But we're really offering something of convenience. Another thing we've experimented with that's worked well is reserve parking. So when we have units and we have a lot of parking, just reserving some spaces. And so we've never done it where we require our entire complex to have it, because that would be tough to manage and would actually put a lot of additional work on our team. But, some residents would say, hey, maybe they're elderly, or maybe they have some sort of injury and they don't really want to walk far with their groceries, right? And so offering them a reserved parking spot for $25 a month, those are things we can do. Storage unit, right? Maybe we can build a, sort of a storage facility on site somewhere if there's space in the leasing center. Once again, people are moving a lot, and they don't, sometimes they don't want to go down the street to the public storage and pay $300 a month. So we can do that. So really the sky's the limit. Some other things we think about, bulk cable and internet, but in today's world, the approach may actually start to look like just community-wide Wi-Fi, charge everybody $20 a month for Wi-Fi access, right? And so it's really, if you start with a position of what would a resident want, and then you just offer those things, right? That's really what we're talking about here. So it just goes back to those conveniences, are things people are willing to pay for. And it's a great way to add additional value with really not having to do a whole lot of work. In some cases, no work at all, so it's why we love commercial real estate.
Yeah. Yeah. So I think like the biggest thing with this is when you're going to a property, just being very creative as to what could we do that is not being done right now. And then you got to really factor in, okay, what's the overall cost? Because, a resident coming in, they're going to be looking at your building and probably a couple of others. So you want to make sure that you're competitive as well. And so, there's a lot of other places that, perhaps they're charging a pest control charge, right? Or maybe there's a carport there and they're charging extra for that. So like knowing the competition is really important, and making sure that your base rent and all of the extras that you're charging are reasonable. You can't go too crazy, because eventually the people are going to be like, this just doesn't make sense. But that being said, if they're good with that base rent and you have something above and beyond what the competition has, they're going to say, you know what, that's actually, I see value in that. What they don't like is if you start charging them for something that they're like, that should be included.
Yeah.
Right.
Yeah,
And I
that's
think
right.
that's a big one when it comes down to increasing your overall income with creative ideas.
I think a great one I've seen that I would absolutely avoid, and we do, is the amenities fee, right? $5 a month to access the pool. It's like, just put it in the rent, right? Make it easy for the person. And so there are a lot of these things we're talking about are actually in they're sort of factored into the rent, right? And then when we show them so it's like, here's your rent and here's all you're getting for it, right? And we can itemize those items. And so that's something we do occasionally. There's still an additional on top. I would say the fence yard is a great example of that, because not all units have that. If they're on the second floor, we can't really do that. So those are things that may be an additional charge, but we try to wrap as much of this into the actual rental rate, and it's just factored in the math. And then the leasing manager and the property manager know to just show that value, that this is headline rent, but this is all the things you're getting for that. So it's something we play with a little bit, because you're right. Nobody wants to come in and say, oh, the rent's, $1,600, but then they get the lease and it's now all of a sudden $1,900. And they're like, wait, what happened? How did we go from 16 to 19? So yeah, you got to be a little cautious here. You can't go over the top and push too hard, because then you may be driving residents away. And one of the key factors here, and we're going to touch on this, is renewals, right? You got to, one of the best ways to keep income flowing in is to keep people happy and keeping them renewing and agreeing to those rental increases. So you definitely have to be cautious here. You don't want to go too far and push too hard.
Yeah, for sure. And so before we get into how we can cut expenses, I think you nailed that in regards to like making sure that you actually get renewals, because vacancy is one way to really not, we'll say, to lower the amount of income that you're getting.
Yeah.
And so
it's a cash flow killer, right?
Well, just imagine, I mean, geez, all of a sudden you got people moving out, you got zero coming in. So let alone, $25 here and there, that's one thing. But if you lose, all of a sudden you start losing, $1,500, $2,000 because you got vacancy from one unit being down. This is where the customer service and making sure that this is of untold importance. I know, John, like we going into this, like whenever we look at a building, and we just looked at an asset, and one of the feedback that came back was, we're actually flying out to go look at it on Monday, but the fact is that we had our property manager actually go through and walk through in our GC, and the feedback came as like, yeah, the property management was horrible. And I'm like, oh, music to my ears, because you can imagine how much that would be impacting your overall net operating income. Because on those renewals, there's one, they're not going to be paying a premium because they're just not content. But two, they're probably going to go somewhere else, which means that you got to get somebody else in, as somebody brand new. And that new person, when they meet that property manager, they're not likely to be super excited, versus having a phenomenal property manager that just loves on them, that's excellent. They're going to be more excited to pay more of a premium. So I think this is one of the biggest opportunities when it comes down to increasing your income, is having great property managers that love on people, property managers that can actually close and help people make decisions to be able to say, yes, this is going to be the community for me. And then making sure that the experience when they come in, it's actually a wow experience. So making sure that the leasing center is staged properly, making sure that the model suite is staged properly. Like, John, we even do a wow fridge. So when they come in, there's a fridge there for the kids, or maybe even for the adults. It's like they got drinks and snacks, and like that kind of stuff is not talked a lot about, but is probably actually one of the biggest, we'll say, factors for our properties overshooting our projections.
Yeah, I mean, and we're not talking about those little like 5-ounce bottles of water. Mark, I remember, there were closing attorneys in Atlanta that I would say would largely get more business because they had Godiva chocolates and like sparkling water as opposed to a cheap plastic bottle of water. I mean, it just goes back to, it's how it makes you feel, right? So for us, our wow fridges, it's not just, once again, plastic bottles of water. We have sparkling water, some sodas, some healthy drink options, snacks for the kids. If a couple's coming in with their young child and they're trying to tour the unit, like a little pack of Goldfish could distract that kid just enough so they could really focus on the task at hand and really tour this property with intention. And we touched on this, right? But that vacancy is a cash flow killer. And it's a lot more expensive to find a new tenant than it is to keep a current one, right? And so, it goes back to how they're treated throughout the process. So if they have a maintenance issue, right, one of our guarantees is we'll resolve that same day or certainly within 24 hours unless we need to order a part. So being speedy with that service is super critical, because if your sink is clogged or your toilet's clogged, you can't use it. That is impacting your life. And by not resolving that quickly, that could be the thing that causes that person to move out. And so even at renewal, right, we are, increasing rent to meet market. And so, certain things you may not have to do it, but you could even offer a small incentive. For example, having the maintenance tech install a $200 ceiling fan, and you get a 5% rental increase, and you keep a good paying resident in that building for another year, that is well worth it, right? And so, these are just little things you have to be thinking about and mindful of, because look at it, if you take a 100-unit building and say the vacancy is 10% and you can get it to 5, you've now added at minimum $50,000 in additional annual income just by keeping that occupancy tight, right? So that 5% difference just adds massive value. So that is definitely number 2, just keeping your current tenants happy and keeping the turnover at a minimum makes a huge difference in your income at the end of the day.
Yeah. I mean, the maintenance requests being fixed. I mean, we offer a 48-hour guarantee that we're going to fix your maintenance requests. Now, if we need to order a special part, those are the one-off exceptions. But in general, the 48 hours, or you get a concession. And so one of the reasons why we implemented this, I'll share an example. So I was getting my hair cut, and I think they call them barbers now. So I was getting from this guy, and he started telling me about the rental that he was living in. He's like, man, this landlord, and we probably have all heard these stories before. This landlord, I've been asking him for months to fix the toilet. The toilet keeps leaking, and he's just not coming in. He's like, it's frustrating. It's like it's leaking, and this isn't good. He's like, I had to bring my brother in finally to fix it. He's like, he was so upset. He was just should have seen him. He's like, and then the next time I went, it's like, oh, how's it going? And he's like, I put a deposit on another spot. He's like, I'm out of here. He's like, this is horrible. And the place he went to, the outdoor screen was not exactly what he wanted, but he was just so upset with the previous owner. And now the interesting thing is that the previous owner probably doesn't even know that was the reason why he moved out. He probably didn't even, knew that maybe he was upset about that, but he wouldn't have connected the dots, and he moved out because of that. And think about how much cost that would have him, even if it was vacant for 1 or 2 months.
Yeah.
I mean, the cost to send somebody in, it's attention. And so urgent attention is something that I found with these assets that is of untold importance. There's got to be an urgent attention to detail. And so the customer service, when people reach out and they say there's an issue, how fast you respond to that is of untold importance, and that will drive your bottom line. It's one of the great customer service, and like focusing on the basics will drive your net operating income one of the most that I've seen, more than getting $20 here or there. This is going to help your overall occupancy. It's going to like we have a wait list for 2 bedrooms because like people just they love living there. On our Largo property, for example, there's a wait list there.
They're and we're getting, and they want that too when they, that's right.
We're getting overperformer rents on units that are not even renovated. So we're getting over our renovated performer rents without even renovating the units because they want to stay in the unit that they're in, and they love the community. And so it's really interesting to see that such a simple thing, it drives your overall income more than more than you expected, anyways, from what I've seen.
Well, and one thing we haven't even mentioned, right, with turnover is that you actually have what we call turn costs, right? So we have to, at minimum, generally go in and paint and recarpet, or maybe even replace the hard surface floors, because, once again, people do live in these buildings. And so whether it's a dog or a small child, and so, once again, even if it's minimal, it's still a few $100s. And so that's biting into, that's adding expense. So that's biting into your NOI. So if you can keep a resident happy and keep them renewing, you're lowering expenses while also increasing increasing income. So it is such a critical factor. And, you mentioned earlier those bad reviews, or we personally experience a negative thing with a property manager when we're touring the deal. But to me, that's like finding a big stack of cash on the ground, right? It's just like all you have to do is pick it up, right? And just replace that person, bring somebody in better, and all of a sudden you have a lift there. So, it goes back to why we love this business. And, one other thing, really number 3 here is utilities, right? And so one of the deals we just put an offer in on that, we're pretty confident we're going to win. I'm operating under that assumption, Mark. But come to find out that they're basically charging a flat rate for each utility to every tenant. And so that's an okay strategy, I suppose. But, they're talking about $15 for this, $20 for that. Well, I guarantee you that owner is paying a large percentage of that. So there's something called a RUBS program, which is ratio utility billing system. So what we do is we basically could take all the utility costs, and then we basically create a ratio based on how many units. And you have to be a little cautious here, and you have to really know your market, because every municipality has some rules around this. So you can't bill back 100%, because obviously there's lights, there's common utilities, common areas, leasing center, etc. So as a general rule of thumb, about 65%, some cases it could be higher, can be charged back. So, just making sure people are paying their fair share of the utilities is a way you can really capture a lot of income. And what we're talking about is really reducing expenses, of course, when I say that. But by reducing those expenses, we are having an impact on net operating income. So that's really the third way a lot of investors and operators miss in terms of ways to drive that additional NOI.
Yeah, right on. And then to build further on that, so there's utilities, but then just getting multiple quotes as a general rule. So this is a big one. I mean, property management. This can be overall your expenses when it comes down to your renovations. That's a big one. But then just your overall ongoing costs as well is another big one. So when it comes down to areas that we get multiple quotes in, John, where would you say would be some of the lowest hanging fruit that we find when we go about these business plans?
Yeah, so for sure, insurance, multiple quotes on insurance. We look at multiple debt quotes, of course. We every vendor we do business with. So our construction teams, we have a construction manager, but we have to leverage third parties for some of the work, right? So getting multiple bids. And then what we try to do from a strategic standpoint is once we really lock arms with a great vendor, we do a lot of business with that vendor, because over time, as you do more business, that economy of scale can help drive down your costs. So for example, if you went and had a different property management company at every single asset you owned and operated, you're probably going to be paying about 3.5% of your income. That's generally what property managers charge to manage the property. And there's occasionally little ancillary things that you have to pay for, like their software, but 3.5% of your income is going to that property manager. So if you build a relationship with a firm and you lock arms, you can negotiate that down. And so we have some buildings where we're paying 3%, 2.5%. By doing construction management in-house, we're reducing an expense, because often what happens is an operator has the property manager manage that for 3+%. And so just all those things. But yeah, contractors, so our landscapers, that's a big one. Mark in Charleston, we had a vendor that was doing just an okay job. And the previous owner had a contract in place. As soon as that contract expired, we got multiple bids, and we drove down our maintenance just on landscaping, just cutting the grass, blowing and weeding and all that good stuff, by 40+%, just because we brought a new vendor in that was hungry for the business and was performing at a higher level. Now, when I say we have these vendors we lock arms with, that's not to say we just forget about it and move on down the path. We still have new bids come in on a regular cadence, because we want to keep them honest. I hate to say it so bluntly, but sometimes people get comfortable and you see, the results of their efforts or work start to dip because they think they've got the business locked down, or a new vendor comes in. Insurance, going back to that, we had an insurance policy in place on Largo that at the time we closed was $400 less than what we had received from other insurance carriers. So we were doing great. We loved it, but it was still quite high. It's Florida. But when we came up for our renewal, we went back into the marketplace, got multiple bids in, and we were able to reduce that cost by nearly half, because we had no issues with hurricanes that had come through and other weather events. We also did preventative maintenance around the property, trimming back limbs, putting in new gutters, new downspouts, things like that that help mitigate risk for the insurance carrier. And because of those proactive steps, we were able to now massively reduce our costs. So in that instance, Mark, that 50% saving on our insurance added approximately $2 million in value to that building, just because we went back out in the marketplace. We didn't just renew; we went out and found out what else is out there. And so it's an annual process at minimum. We renegotiate and we get new bids in, but often, because we picked in the right place, at the right time, we stick with that vendor. But you just never know. Once again, it's just something you have to reevaluate on a regular cadence.
Yeah. And again, it's just urgent attention. I found that unless you're on the ball on a regular basis, and that's why to run these larger assets, you really need to be full time.
Yeah.
Because there's too much, and it's too easy just to put it on autopilot versus driving it and staying on top of it. I mean, we're seeing it. I mean, you could see it in the government, right? The government goes on autopilot at a certain element, and all of a sudden you're sending out checks that you shouldn't have sent out. You're having certain contractors that are charging way more. This is a federal contract, so you can charge way more. And you see it with big corporations as well. They go into, we'll call it like treadmill, where they're just not as sharp as, say, we'll call it a small business owner that starts up that's doing everything themselves. They are like on the ball with every cent spent in general. But as you start to grow, you have to be able to keep that kind of intensity. And you can't one person can't do it all on their own when you're getting into these larger 100-unit buildings. But you got to have that kind of rookie, that mindset, in the sense of that urgent attention on a regular basis to continue to stay on the ball and drive all these details, because there's a lot of details. You just got to have that kind of mindset that I'm driving this as a business, and every single month I want to improve on the metrics and the numbers.
Yeah, no, you're right about these larger corporations. And, in my prior business, Mark Spain Real Estate, when we were small, when we were massive, we looked at every single expense on a regular basis, a monthly basis at minimum. We were looking at every credit card statement. We were scanning through, looking for any unnecessary subscriptions. And so, creep can occur. And before you know it, you're paying for things you don't need. Nor did you even know you had, right? And so having those tight financial controls in place are critical. So no dollar gets spent at our property without our asset manager's approval, and she doesn't approve anything without our approval, right? And so it's not like this difficult approval process. It's just a few steps, but it just ensures that everybody's looking at it and everybody agrees. And one of the strategies that works really well too, Mark, is get, really close with the property management team. So George, our asset manager, is on site at minimum every 2 months, but more often monthly. I go as often as possible, typically a minimum quarterly, sometimes more often. And so when we're out there, we're talking with the property management team and we're listening. We're finding out what are residents saying, what are they looking for, what's missing, why did we had 15 prospects this week, but only 5 applications. What happened to those 10? And what was the reason they chose not to rent from us? And then we can use that intel to either add additional services, or maybe, maybe we're pushing something that nobody wants, right? And so let's just get rid of it and make it easier for people to make that decision. So, staying as close to the ground, for lack of a better way of saying it, is critical, so you can make those good decisions and listen to the feedback. And one of the things, man, one of our fundamentals is we seek feedback. And so we are surveying the residents after they sign the lease, after move in. So we're finding out how that process was. And often things are revealed in there that we can leverage to either drive additional income, reduce expenses, or, just treat people differently to get a better result, right? What goes back to that renewal and staying in the unit longer is one of the best ways to drive income, right? So it goes back to, I think there's a lot of people in this business, and, we see it, right, where there's a group we're actually familiar with, and they buy assets all over the country. They buy all different kinds of asset classes, and they're challenged right now because, they don't even know what's happening at half their properties, where our properties are in like 3 markets, right? And so I can go to Atlanta, I can go to Charleston, I can go to Tampa, and I can really get a feel for what's happening and understand, because, I think people are largely the same, but every market has a slightly different culture, and you just have to address those things. What's important, right? Florida, Charleston, it's got to be cool, man. The air conditioning has got to work, right? And so just making sure those preventative steps are taken so you have no disruption there. Because if somebody loses their air conditioning for a week, you better believe they're moving when their lease is up. It's just they will, right? They'll never forget that hellacious week of heat in Tampa, right? So just these things all add up. So I think you're right on. It's that urgent attention to every little detail, and everything is important, right? When there's a resident unhappy, you got to attack that.
Right on. Well, guys, if you like what you're hearing and you would be interested in finding more about our next deal, we are getting closer to that next deal. And so if you want to be on the list and you want to be informed when that comes out, make sure to go to fariscapitalpartners.com. You can go ahead and reserve your spot and book a call with us just to see if it's the right fit or not. You can go to fariscapitalpartners.com. And thanks for listening, guys. If you enjoyed the show, you can go ahead and subscribe and share with other high net worth investors that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.